So you should think that as the money supply grows, if we want people to get their hands on those, and new people, new entrants to get their hands on those coins, then it should be that there's a response in the exchanges to this money supply growth. But we just don't have that, which is kind of, it's a disappointing result for a lot of the proponents here. What about, another very valid question is, are these price shocks causing people to actually use the coins? And this gets at the deflationary idea, which is, we've seen that Bitcoin, people use deflationary currency out of context, because when we're talking about deflation, we're talking about changes in the prices of goods. If we're talking about a currency of some sort changing value, we're talking about appreciation or depreciation. And those two things are very, very different. People talk about deflationary spirals with Bitcoin, not knowing that the original context that deflationary spirals were being talked about was related to goods, not related to currencies at all. So again, are these price shocks causing people to use their coins, or are they causing them to hoard the coins and hold them, not use them in any way? And again, so Bitcoin has this history of steady appreciation, and people have tended to hoard it because it has a higher value tomorrow than it does today. And so you can see here, again, we're let down by the fact that these price innovations are not changing, at least for the hot side, are not changing the transactions to these wallets. But over here you see that there's an effect. It's very, very, very temporary. It's maybe for a period, maybe a one period positive effect. But you can see that again with both of these, the effect might as well be indistinguishable from that zero line that's going across.
So you're pretty much saying that people are still keeping.
So yeah, so here, here when the price changes in some way, we're not seeing any difference in the way that transactions occur in the network. So, and I'm still kind of chewing on that myself as to what that means, because all of this and this analysis of it is still very, very new. So, what does all this mean that we're presenting there? Most of the responses tended to be indistinguishable from zero. It's not indicative of a very healthy system, so let's hope that turns around. So the question now is, how does Bitcoin stack up against the world currency pairs like the euro, the yen, the dollar? Are these pairs also correlated with their search frequency? So the tables I had for that don't fit on here. Let's go outside for a second. So what we did with this was let me try to blow this up a little bit. Took a bunch of data for the spot rates for, here's the US dollar against the euro, against the yen, against the Swiss franc, etc. And we saw how the time passed of these exchange rates are correlated with the search frequency for the dollar. And we get those correlation values down here. And it tends to be that for these currency pairs, they're not very correlated with the search frequency for the dollar. In fact, we have 1, 2, 3, 4, 5, 6, we have 7 correlations between currency pairs and search frequency, but only 2 of these correlations are statistically significant in any sense. So that's kind of strange. Okay, all right, so that was on the dollar side. What about the euro side? What if we looked at those same pairs, but as not tied to the dollar, tied to the euro? So the euro US dollar rate, the euro yen rate, the euro pound rate. And we look at the same thing. How are these currency pairs correlated with their search frequency for the euro? And you see the exact same pattern here. These major world currency pairs that are traded, I'm sure hundreds of billions, if not trillions of dollars daily, are not very correlated. In fact, there's 7 of these, and there's 1, 2, 3 significant ones here of that. But it doesn't really matter whether they're significant or not. What really matters is, how does the magnitude of that correlation with search frequency compare to Bitcoin's correlation with its search frequency, right? Because we've seen, and you can easily pull up a graph if you plot. Let me get my marker briefly. Yeah, I need 2 colors. Sorry. No, you're not. So if you wanted to, you could go and look up the data on it. And if you plotted either the price or the search frequency here, S, over time, you're going to see that the Bitcoin price, kind of behaves like this, and that the search frequency tends to follow that very closely. So again, here we're curious as to how Bitcoin's correlation with its search frequency, is that more or less strong than any of the world currency pairs here and their correlation with their search frequency.
This is people like Googling Bitcoin.
Googling Bitcoin, yeah. So again, it should be, right, for something that we're hoping is to be a currency, it should be that it's not responsive to how popular it is, right? We want that our currency to be stable, so it shouldn't be as people Google it more that it changes the value. And it makes sense. And we saw that for most of these currency pairs it doesn't. And you can do a statistical test. And I should note here that the Google Bitcoin rate is highly correlated with its search frequency, as you would expect. And you can do a test of whether the world currency pairs are in general larger than this currency or in general smaller than this currency. And of course you get the result that this correlation between the Bitcoin dollar rate and its search frequency is a higher magnitude than all of the rest of the world currency pairs with their search frequencies.
Because really within the last 6 months, I would say there's more than 50% of people didn't even know what Bitcoin was.
Yeah.
Well, that's
People
sort
kind
of I mean, these currencies are all already
Established.
Yeah.
Yeah.
No, that's what I'm
Maybe
saying.
if you could go back, I don't think Google was around.
At like
when
in
the
the
euro came out,
1770s,
Yeah,
and look
no,
at
it's
look
not
at
feasible.
look at the
Yeah.
1770s and see how many
I
times
mean,
the
I
U.S.
should
was
say it would be
Googled.
very feasible. It just take way more time than I had to go through that. But you bring up a valid point. Is it a good period to compare the two? Probably not the best period, because yeah, Bitcoin is brand new. So of course,
Are there
we should
any
expect
are
them
there
to
any
have
other
more.
new nations where they have their own new currency that you can compare it to?
Well, Venezuela, did they recently make a new dollar or something?
But still, like
Yeah.
Venezuela is like still a really like a pretty not a really old
Oh,
country,
yeah, it's
but
an old country, but you're talking about a nation that recently made a new currency.
What about
Right.
the Qatari exchanges where they have like a basket currencies that they do oil transaction with as opposed to dollar transactions? That might be something
No
like
idea.
that's similar.
No idea. So that was just a simple argument. So I should write that up in the paper that, hey, this is perhaps not the best times to compare these two. But it was just to demonstrate that, again, we would hope for these world currency pairs to not be correlated with those things, and they are. So I'm going to skip this because we don't have much time.
about
The
5
question
minutes.
here I'm talking about is, can you actually use this econometrics that I've developed some of to inform some trading decisions? And the answer is yes. Don't ever trade on instruments that are tied to the price because the volatility is too insane. But you can find places that have derivatives based on some more stable random variables like the difficulty. So how can we use this VIR to price the future of Bitcoin, this to price derivatives on the difficulty? And I'm going to skip all that because we don't really have time to go over that. But basically, if there's positions you could take on options A through F there, those are all derivatives in some market. And you can use time series if you wanted to provide a forecast of what this particular random value is going to be in the future. So here I forecasted out 5 periods, and I know that I'm 95% confident that it's going to be somewhere in this gray band here, and that maybe I should take positions on these guys up here, A, B, and C. So again, if you're interested in Bitcoin, you're interested in econometrics, there's a lot of really cool things you can do. And I have to skip through all this so that we have some time to do this. So in general, what does the data say about the value of the network in general? Does the community value this service at a constant dollar rate? If they do, as the exchange rate changes, the average tip to the miners should fall, right? If it's valued at a constant dollar rate, how much they tip is going to be tied to the dollar. The alternative to that, of course, is that they value this at a constant rate in Bitcoins. So all you have to do is plot how the average fee here on the left-hand side changes when the price changes. And you can see that if we wanted to pick a line that would best describe this data, it'd probably be pretty close to flat. Suggesting here that the average fee doesn't really depend on the price, that we tend to value this network, this hash rate network that we've built in Bitcoin at a constant rate in Bitcoin, not at a rate that's tied to the dollar.
I'm not sure if you know this or not, but the 21 million limit, is that a hard limit or is that an asymptote?
It's a hard limit as far as I know.
Okay. Do you
Yeah.
think that'll cause problems because there will still be transaction fees and that's how the transactions get processed
Yeah.
at that point? But at that point, then what needs to stop the transaction fees from just going out of control? Is there anything that pushes downward on that price?
So I'm like, Mike might, how do they do change the minimum transaction fee from time to time? I don't really know how they set that. In general, that's not a problem that it goes up though. They've been moving the transaction fee down.
But we're still mining though.
Yeah.
That's the thing. When
We'll
mining
always be
stops-
mining, even when all the 21 million coins are here, we'll still be mining after
Why?
that.
Why?
Because the transactions will still be in use. Again, the mining makes sure that the transactions are inside that ledger. So
But
again,
you're pulling from the available
Yeah.
bucket of Bitcoin.
yeah, so it's like tips. So as opposed to paying Visa a tip for the beverages that we have here in the room today, we're paying the miners that fee.
But the more you pay, the further up in the blockchain you get, right? And that's
The more you pay, the further up in the
transaction.
blockchain.
The more guarantee you are of getting in the nearest block.
So if